Accounting Superstars. This is Professor Don Bush from the Accounting Superstar channel. So glad you're here. I've been a professor for about 30 years and a CPA for about that long, and I've got great ways to explain accounting, so welcome aboard. Today's lesson is about work in process. Work in process is the heart and soul of the manufacturing accounting system. It's where everything comes together. I can't overemphasize how important this account is. But it's not too bad. It's not too hard. I hope you know by now that there are three different costs in manufacturing. And one is direct labor, direct materials, and overhead, right? Manufacturing overhead. And so work in process is where everything comes together. It's the meeting place for all these costs. So let's get started. Hey, but while I'm thinking of it, I've got a webpage called accountingsuperstars.com. I've got all these videos listed by topic. So you can go to that webpage, accountingsuperstars.com. So what I got right here is I have a little chart here with some numbers, and we'll come back to those in a minute. It's just some information when we go to figure out what the work in process account is. So hang in there, we'll get back to it. But here's really the big lesson for today. Here are the things that go into work in process. So raw materials, and now this is for Sunset Sailboat Company. And Sunset Sailboat Company builds beautiful sailboats, 25 foot to about 35 foot sailboats. And they use a lot of teak wood. Here's a little picture of teak wood lumber that they use. Teak wood's very expensive. Here's an outboard motor that's going to be installed on the boat. Raw materials tend to be items that management wants to track. They tend to be rather pricey items like teak wood. Teak wood is really expensive. Teak wood's about, I'd say $30, $40 a board foot at least. And of course, outboard motors aren't cheap either. They're, between $1,000 and $5,000 for a sailboat. And but anyways, these are direct raw materials, and it's important to distinguish that. I know it doesn't say direct raw materials, but I just found this little picture on the internet, so I thought I'd use it. But this would be direct raw materials. So it comes into work in process. We also have direct labor. Now here's a guy, a construction guy cutting a board. And direct labor, those are the people that are actually building the product. Now for Sunset Sailboat Company, it would be the people sanding the fiberglass and the people painting the boat and the people installing the motor and the people installing the navigation equipment. So the direct labor, people actually working on the boats. Now we also have indirect labor, but we don't count that here with the direct labor. Indirect labor, those are folks that assist or are auxiliary to the direct labor. And you can find those in manufacturing overhead, which is just here to the right. So manufacturing overhead, that's the third type of cost here. And we have indirect labor. Here's a picture of a janitor cleaning out the factory. And we have indirect materials. Now, indirect materials, they're important. They're very important when you're building anything. And in this case here, I've got a little bottle of glue here showing. But indirect materials, those are items that management's not too worried about tracking. I mean, they're important and they do add up to a fair amount of money, but it's really not worth tracking exactly how much you use. And so glue would be a good example, probably miscellaneous nuts and bolts for building the boats. I would imagine caulking around the port lights on the sailboat, just, miscellaneous stuff. And then we have other factory costs here like insurance and property taxes. And of course you have to keep the building warm for the workers, the heating costs and the overhead lights, all of that is overhead. The supervisor's salary. So this is a lot of stuff, to use the technical term, stuff. It's a lot of costs. So we have these are the three main costs here: raw materials, direct labor, manufacturing overhead. And they all meet in work in process. Now, right below here, here's something that does not belong in work in process inventory. They're called period costs. And I've got a picture of Steve Carell in the TV show The Office, really a funny TV show. If you've never seen it, it's really pretty good. It took me a while to kind of get into it, but once you get hooked on it, it's a lot of fun. So Period costs, what the heck are they? They're office costs. They're anybody that works in the big office, like the marketing people, the advertising people, the accountants, the bookkeepers, the payroll people. Gosh, who else? Possibly the purchasing agent working in there, the CEO, the vice presidents, the list goes on and on and on. And so anything that has to do with the office and office supplies and oh gosh, a lot of computer expenses for the office. So they never, ever, ever, never, not even once, go into the work in process inventory. You see, work in process has to do with the factory. Period costs have to do with the office. So you got to distinguish between the two. So now's time to split the screen a little bit. What I've got here, I've got a picture of a boat factory, and it looks like they're building fiberglass hulls here, and it appears that there are molds, and they pour fiberglass into these molds, and they crank out boat hulls. So I'm going to split the screen, and we'll just see how these numbers work. Right up above are the numbers that I was telling you about. I told you that we'd put them to use. So here's how it works. It's really pretty easy. What you do is you start with beginning work in process inventory, and that would be $100 right there. And so let me get there we go, $100. And you would just drop it into place. And then we're going to add the 3 different types of costs, plus direct raw materials that have been used. Okay, 300, and I'm getting that number from there. And direct labor, let's see, that number is $500, and it comes from right there, so 500. Plus manufacturing overhead, that comes next, 200. And finally, we're going to subtract out ending inventory. We're going to subtract out the 75. And I'll explain what I mean by that. It's an example that I always use. So here's what's going on. Is if you, rather than think of it in dollars, if you think of it as apples, you know, lowering it down to a real basic elementary type of thing. If you start out with 100 apples and you buy 300 more, which equals 400 now, and you buy 500 more, which equals 900, and you buy another 200, which equals what? 1,100, and minus away 75 because you have 75 left. That is, you started with 100, you purchased another 300 apples, another 500 apples, and you purchased another 200 apples. Now you've got a whole bunch of apples here to sell. And at the end of the day, boy, you sold a lot of apples. At the end of the day, you only have 75 apples left. How many apples did you sell? So all you have to do is subtract that 75, and there's your answer, 1,025. So ladies and gentlemen, the main lesson for today, though, is what goes into work in process. Direct raw materials, direct labor, and manufacturing overhead. They all go into work in process. That's why work in process is so important. What does not go into work in process are period costs. So don't ever put period costs in there. And if you can't remember what a period cost is, rewind this video, watch it again. Or I've got another couple of videos on period costs and what they are, and I go into grand detail on those. So if you like this video, hit the like button, hit the subscribe button. That way I know that you like these videos. If you have a topic that you want to learn about or you don't understand, let me know, make a comment. And check out accountingsuperstars.com, my webpage, all right? You can find all the videos there by topic. So have a great day, folks. Over and out.